Baljit Kaur, give me your overview of the market, please.
Well, Islamic finance has grown at an annual growth rate of 15% in the last 4 years. We're looking at an industry that has seen a growth of assets of about $1 trillion. Our conservative estimate is for the industry to grow to $1.6 trillion by 2020. So really the impetus for growth is coming from vast developments in emerging markets, a huge demand for Islamic instruments, the vast liquidity that is very still available in emerging markets, predominantly in the Middle East and in emerging Asia, and also a move towards ethical financing post-crisis, where we've seen a lot of demand for Islamic instruments. And so we're seeing an industry that is fairly robust in its growth trajectory, and it's something we're very positive about.
You talked about an industry that's growing at the rate of 15% per annum?
That's right.
It's an amazing figure.
It is, yes, absolutely. Especially since it's starting from a very low base, and really the industry has only been fundamentally around in the last decade or so. And also the last decade has been fueled by economic prosperity, fundamentally in emerging markets. So this growth rate is a very conservative growth rate. We anticipate that once global economies normalize, that growth could actually perpetuate about 20 to 21%. And that is on the back of a very resilient capital market. The growth of the sukuk market, which is similar to Islamic bonds. The growth of high net worth individuals demanding more and more Islamic assets, as well as the growth of a broader retail Islamic market, which will also include takaful or Islamic insurance.
One of the questions during the course of the discussion was about the pre and post financial crisis, and it was suggested that some economists are saying that actually more attention should be paid to the Islamic system, the Islamic banking, because Islamic banking had fewer problems and the crisis might not have occurred.
That's right, absolutely. In fact, it's very, very interesting thesis. Just going back, looking at how Islamic institutions evolved, at the onset of the crisis, Islamic institutions were very much insulated from the first follow-on effects of the crisis, fundamentally because Sharia financing disallows investments into debt that trades on debt. And so collateralized debt obligations, collateralized loan obligations, a lot of derivatives are basically not permitted within the Sharia context. And so within that framework, Islamic institutions were fairly insulated from the onset of the crisis. Nevertheless, Islamic finance does not exist in a vacuum. It exists within the broader global financial architecture, and that includes the conventional framework. And so when global economies felt the real crunch from the crisis and the real economy started to get impacted, valuations of assets took a drastic dip. We saw the crisis taking a more sinister outlook when investments, consumptions, and so on failed. So by virtue of that, Islamic assets were also impacted. Nevertheless, an interesting point to note here is that if you look at Sharia financing in its purest form, in its most fundamental form, which disallows interest or usury, which disallows investments into highly speculative investments and assets. This really is a very interesting financial mechanism that takes on a very ethical twist, but at the same time provides stable long-term partnership type of returns. So it's an industry that's growing, that's gaining a lot of momentum, especially in emerging markets where infrastructure financing, for instance, is taking a very Islamic-led approach. And so the outlook really for Islamic finance is very bright.
Where does Islamic finance or Islamic banking, because there was a discussion about that too, but where does Islamic banking sit today, post-crisis or emerging from that crisis?
Well, I think there were some very interesting lessons that Islamic institutions took away from the crisis. And the first is on risk management. Really, the Islamic industry has only been around for a decade or so in key markets. And so the industry has not really been tested by sort of a huge crisis. And so this really was the first a sort of litmus test. And so the key takeaways from that were the building of a much robust, stronger risk management framework, the role of the regulator in providing assurances in a time of crisis, the role of the management in providing corporate transparency and in ensuring that the Islamic institution complies within the framework of its Sharia confines, and also in investing in a sort of partnership-led approach. So I think post-crisis, the key takeaways for Islamic institutions will only see these institutions grow far stronger, far better, and in much more positive light.
It didn't stop the question, though, did it, about the whole concept of Islamic banking? Is there such a thing?
Yes, it's interesting, really. Well, if you look at Islamic banking as being a form of partnership, then yes, there is a strong argument that builds a case for Islamic finance, that builds a case for a more ethical way of investments, that provides sort of stable long-term returns to both the investor and the investee. And so yes, there is a very strong case for Islamic finance, especially as global markets evolve post-crisis.